So if you find yourself enjoying music that you're familiar with over new music, there's actually a scientific reason for this phenomenon. It's called the familiarity principle. We tend to develop a preference for things we are repeatedly exposed to. If you've ever strolled around social media, you'll notice that most stock pickers' portfolios look actually kind of similar. The question is that a coincidence? I personally don't think so. I really do think humans prefer to stick with strategies and songs they're familiar with. And there's a big hurdle to consider anything else, even if the alternative is objectively better. You'll actually hear a lot of people say, invest in what you know. There's this other behavioral bias, the status quo bias, that states that we prefer things to remain the same rather than change, simply because the current state feels more familiar and less risky. And that can actually keep people from potentially improving their portfolios. And if you think I'm telling you all this because you too are likely to suffer from these behavioral biases, well, then you're right. But also, I'm here to tell you some good news. And that is that it is here where the opportunity lies. See, if you were to explore those stock names that people hate, stocks that might make people gag, stocks that people are just unwilling to explore, you might just find an edge. Let's call this deep value investing. But what exactly is a value stock? A value stock is a stock that you can buy for cheap compared to its earnings. Towing machinery manufacturing, temp agencies, pest control companies. You feeling dizzy yet? By going into those names that might not be super flashy, but where opportunity lies, you might just be able to beat the market. There's a couple of reasons as to why this might be the case. First off, you're taking on more risk. Think about it. Why would people even consider investing in these companies if it wasn't for the opportunity that the investment offers? It's definitely not for the glamour of telling your friends that you bought a salt producing company. It's not exactly a sexy investment. Deep value names have to have some level of risk associated with them. Maybe they're in a dying industry, maybe earnings are dwindling, or management is just a mess. Therefore, the market demands a higher expected return for you to even hold this stock. The second reason is behavioral. People over extrapolate the bad news into the future and price companies as if they're going straight to zero. And to be honest with you, history shows almost the opposite. On average, mean reversion is more likely. And how has a simple value strategy performed historically? Running a simple backtest from the beginning of 1979 to the end of 2020, the top 50% cheapest stocks based on the price to earnings ratio in the US has returned on paper 13.06% versus 10.49% for the top half most expensive stocks and 12.07% for the stock universe. But let's be honest here, investing in the top 50% is barely value investing. Sure, it's a tilt, but to earn the deep value title, I think we must go even, deeper and target the cheapest names. So as we reduce the number of stocks that are relatively more expensive than the next one, two things happen. One, the remaining portfolio has a higher loading to the value factor. And two, the portfolio has theoretical higher expected returns. After all, if value is where the returns are, then the more value-y you make your portfolio, then the higher the expected returns. The key here then is to be able to balance this deep value portfolio to have as few names as possible to reap the potential rewards of value, while adding as many names as possible to reliably achieve those returns without having the noise of single stocks that take away from the value portfolio. So there's a very fine balance to strike here. And if you're wondering how to begin building a deep value portfolio, I have good news for you. We have a video that goes over which metrics you can use to screen the portfolio and which metric is our preferred. Here at Alpha Architect, our goal is to empower investors through education. We're an asset management firm that focuses on delivering affordable alpha to our clients. If you want more educational content like this, head to alphaarchitect.com. I'll see you there.